Okay, good morning. Today we are going to see the uses of the depreciation NIT and NFIA in national income accounting. So simple that what is national income, how to calculate it, that what are the methods to be calculated, that already we have seen. There are three methods: value-added method, expenditure method and income method. When we are using that value-added method and expenditure method, that answer, first answer when we are using the formula, that answer you got, that is GDPMP. GDPMP, gross domestic product market price. But the problem is that if the question asking you that calculate national income or national income, you know that NNP FC. So at that time what we should do? So the first formula, when you have used that answer you got GDPMP, that you understood. Now GDPMP, how to convert into national income, that the things we are using these three tools. Let's see that one by one how to use that. First I am taking as a depreciation. So the depreciation actually it is that in between the agent of gross and net. Why that word I have used here, agent? Let's see. See that if that anything you have in the gross and you are going to convert into net, after using the formula you calculated GDPMP. Now GDPMP you are converting into NNPFC. First G, that is gross, and N, that is net. So that gross you got and now you convert it into net. So definitely gross and net, in between the tool is depreciation. Gross always bigger, net is smaller. How gross is bigger and net is smaller? Let's see. Have you find this, that the gas cylinder, in the gas cylinder, just check today that the gross weight given to your cylinder is like 39.5 kg or 30 point something kgs has given there. But if you finding is the net weight at this given as 14.06 kgs and all. The meaning is that net weight, that actually liquid petroleum gas you can use that inside, what the liquid petroleum gas, that is net weight. But overall weight with cylinder, iron and all that weight combinedly, it is 39.05 kg. The things is clear, this 39.05 kgs, all that things I cannot use. I can use only up to 14.06 kg. So that the gross is always bigger than the net. So the gross is bigger, net is smaller. Another example we are going to see here. Say that you have purchased 1.5 kg of chicken and you told the person, please clean it and give it to me back. That person cleaned it, and after cleaning, if you waited, you can find out this kgs, it might be reduced. So say example that 1.1 kg. So that you purchased 1.5 kg of chicken, but you actually received how much? 1.1 kg. So in between, what are the wastage has gone? No, that is 0.4 kg, that is depreciation. So from the gross, if I am converting into net, that means from bigger to smaller. Say this one is the gross. Now I am converting into net. That means gross is bigger, I am converting net, so that I should make small. So I should make a small by reducing. Reducing in indirectly subtraction. Say this example. NNPFC and I am having GDPMP. I am converting into NNPFC. So first N and G, that things only we are going to see. Remaining things we will see after discussion of other things. Okay, so net and gross. Now if you are converting net from gross, what you have done? Minus depreciation. Gross minus depreciation, it become net. I hope clear. Okay, now come next NIT. NIT is full form is net indirect taxes. The name says that it is indirect taxes. Sometime the question would be given you GST. Remember that GST and custom, two types of indirect tax we have. Okay, now NIT, net indirect taxes. Now this tool where we should use? This tool use for market price and factor cost. Now come how is to be used that? Say again, market price is bigger one and factor cost is a smaller one. How that market price is bigger one and factor cost is smaller one? Let's see. Say example, if you produced a goods, say example that for the production of goods you used all four factors. Four factors are land, labor, capital, entrepreneurship. So in these 4 factors, entrepreneurship I am keeping aside this time, because of this entrepreneurship the person actually using these factors. So that land, labor, capital, if you using for producing any goods and services, indirectly you are paying some money to them. So for that, for what are the money you are paying to them, for the entrepreneurs or for the firm, it is the expenses. It is expenses, otherwise known as the cost. So now I can say that what are the payment you have done for land, for labor, for the capital, that is nothing but the expenses for firm. So that expenses, otherwise known as the cost, and these are known as the factor. So that what are the expenses you are doing, that is known as the factor cost. Now if any goods and services, for producing of that you use say 100 rupees as payment of all that things, so this is known as the factor cost. Now when any goods and services, the factor cost you incurred 100 rupees, but when you sending this to the market, exactly same amount you are not sending, or exactly same amount you are not charging from that goods and services. You are increasing that. Increasing in this some profit part included, that also is a factor cost only, or I am thinking factor payment only, and remaining is that some are the tax you are going to pay to the government, and that tax you are collecting from the public or general customer. So that what are the tax you are collecting from the customer or ultimate user, that is GST, or can say that indirect taxes. So now that you are adding one indirect taxes, so that factor cost plus NIT, that amount also you are including in the factor cost. So factor cost, say example 100 rupees and you are included 20 rupees, so that rate is 120. This 20 is known as the NIT. Now point is very clear. Say market price is bigger because of factor cost, what the cost actually you have incurred for the producing goods and services. In this you have added 20 rupees as NIT for making market price. So the simple thing is that where you are converting from factor cost to market price for a smaller to greater, so a smaller to bigger, so that you should add NIT. Factor cost plus NIT, it become market price. Opposite is that market price minus NIT, it become factor cost. I hope clear. Let's see one example here. Same only, NNPFC, net national product factor cost, I am making here by using of that gross domestic product market price. Now think about that net and gross already we seen, right? We have seen by using of the depreciation. Now factor cost and market price, factor cost and market price, the changes we are going to see. Factor cost is a smaller one, market price is a bigger one. So that bigger one you have, you are making a smaller one. Remember that every time you are making left side and right side, what the things you are having. So that factor cost you are making out of market price. So that a smaller one you are making from the bigger one. So you should subtract NIT. See the last point here, subtract NIT for making of factor cost. I hope understood. Last point we are going to see here, that is national and domestic. Yeah, this one. Now come here the national and domestic. This part I am removing, otherwise it will be confused one. Yes. Now come here the national and domestic. In this, the tool we are using for the conversion of domestic to national or national to domestic, that is NFIA. NFIA full form is net factor income from abroad. Let's see how we are using this. Say the national income and domestic income. What is the definition we have seen? Domestic income is the sum total of all goods and services market value within the domestic territory. National income is that what? Same thing within the territory as well as the income earning from the outside. That means national income, domestic income also there, plus outside income also coming and adding with that, that is known as the national income. So indirectly national income is bigger one, so that national income is bigger and the domestic income is smaller. So if domestic income converted into national income, definitely it should be add NFIA. Already as per the definition only says that the income earned from the outside, that also supposed to add. So simple that national income, for making national income from domestic income, that you should add NFIA. Opposite, from the domestic from the national income, when you converting into domestic income, national income you have, national income bigger one you have, you making smaller one, that is domestic income, just subtract, that means reduce. Or domestic income you have a smaller one, you are making bigger one, just add, right? More you are adding, so that from domestic to national you should add NFIA, national to domestic you should subtract NFIA. That's it. This is the three tools where I am summarizing. When gross and net, the tool is depreciation, market price and factor cost, the tool is NIT, net indirect taxes, domestic and national, the tool is NFIA, net factor income from abroad. But the thing is, all the time it's not given direct like that. It might be given that indirect way also. Let's see indirect way is what? Depreciation, otherwise known as consumption of fixed capital. Consumption of fixed capital. It might be given apart from this depreciation also. So don't be confused, that is nothing but depreciation only. You should use as depreciation like. Okay, next one is that NFIA. If NFIA, that is net factor income from abroad, directly not given, it would be given you factor income from abroad and factor income to abroad. Again I am telling that NFIA equal to factor income from abroad minus factor income to abroad. If directly the word net not given, that is net factor income from abroad not given, you should do subtract factor income from abroad from factor income from abroad, factor income to abroad. Again, factor income from net factor income from abroad, for making it I should subtract from FIFA, that is factor income from abroad, to FITA, factor income to abroad. That's it. Another part is NIT, directly net indirect tax. If it is not given, net indirect tax, if it is not given, it would be given you indirect tax and subsidies. So at that place, that NIT equal to IT minus subsidies. You can separately calculate this, and after that you can add as that NIT. So that IT minus subsidies, it is nothing but the NIT. I hope clear. Okay. Sometime what that NFIA not given, that is net factor income from abroad not given. It is given you net factor income to abroad. So at the place of add, anywhere at the place of add we have seen net factor income from abroad. If it is given you net factor income to abroad, just do opposite. That means subtract it. At the place of add you should subtract it. That's it. But if you calculating net factor income to abroad, you should do opposite. That is FITA, factor income to abroad minus factor income from abroad. That's it. Now that two three things I have written here for conversion purpose. Let's see that how to be converted on the things. Okay, first one is that GDP-MP. I am making it, I am having NDP-MP. Now think about what are the changes only. Gross and net remaining all are same. See, domestic product market price, domestic product market price. So definitely gross I am making, gross bigger one I am making, smaller one I am having, add depreciation. Done. Next one is gross national product factor cost, GNP FC. Now gross national product factor cost, I am having which one? Net national product factor market price. Net national product market price. Now see the conversion. Gross national product factor cost I am having net national product market price. So indirectly says that what? First I am converting G from N plus depreciation, done. Now factor cost I am making from market price. Now we know that the factor cost is the smaller one and market price is the bigger one. So that I am making a smaller one. I am having bigger one. So should subtract. So that minus this one changes should be, that is minus NIT, because from bigger one I am converting is the smaller one, minus NIT, done. Now domestic income otherwise known as what? NDPFC. Already we know that domestic income, that otherwise known as that NDPFC, and national income otherwise known as what? NNPFC. Now see the changes. N, net, no changes. Domestic, national, only domestic and national. This is also factor cost, this is also factor cost. So that domestic and national, that things only changes. Now domestic I am making, left side, domestic I am making, I am having national. So that national is a bigger one, I am making a smaller one. Subtract NFIA, net factor income from abroad. Next one is NNPFC. I am having GDPMP. I am making NNPFC, I am having GDPMP. Now see that net I am having gross. Net bigger one I am having, that is gross I am having, I am converting to net, subtract. So that is subtract of what? Gross and net. Tool is depreciation subtraction. Next, national, domestic. I am making national. National is the bigger one, domestic is the smaller one. Smaller one I am having, left side I am making, right? So a smaller one I am having, I am making bigger one. So that add NFIA. Next, factor cost I am making, market price I am having, that means bigger one I am having, market price is bigger one, factor cost is the smaller one. Bigger one I am having, market price I am having, subtract NIT. I hope clear. Next one is that sometime at the place of GDPMP it would be given you GVA, gross value added. Don't be confused, gross value added also known as GDPMP. Gross value added most of the time given at the time of product method. Okay, now GBA I am making, that is gross domestic product, market price I am making, I am having net national product factor cost. See that all are the changes. Gross I am making, net I am having. Gross domestic product market price I am making this. So that here gross I am making from the net. So that a smaller I am having, making gross, bigger one. So add depreciation. Next one is domestic I am making, I am having national. So that domestic is the smaller one, I am having bigger one, national. So that reduce to make domestic, that is minus NFIA. Market price I am making, factor cost I am having. So again things, factor cost smaller thing I am having, I am making bigger one. So that add NIT. A smaller I am having, making bigger one, add that much, add NIT. I hope clear all that things. If any doubt you have, please make comment down. I will clear that your doubt definitely. Okay, thank you.